General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
All right, time to knock the workout. Tuesday. Today is definitely an expansion day. Engage day. Medium confidence. Let's see the delivery. So 50% Monday's range was respected. We dipped right here. This is a possible anchor for the week. Dip below 50%. We just ran, swept Asia. It's pretty one-sided. I wonder if this is classic OTE. Mm, 50%. It didn't come to OTE. We almost made it to previous week's high. So this is landing low of the day between 2 and 4, 330. Low of the day profile. So the anchor point could be Monday. Let's look at the hour. Let's keep this here. Some old new week opening gaps from back in the day. It's crazy, a lot of confluence here. Buy side is obvious. This is the high that created this swing that took this low. So it's not previous week's high, it's the week before that. Interesting areas to buy from. Will be here. This gap is not really interesting. Right around here, I'm pretty sure it's like breakers and everything. So this is a good area to look for a retest to target here. This is the candle, the open price of the candle that broke the structure. So it retraced back here. Makes sense to buy, to go up here. Tomorrow is Wednesday, the last day for the textbook week of NFP, the trade. You can shop on Thursday before news, and the Supreme Court is doing the tariff news. But then, pretty sure as soon as we take the higher, everybody's going to try to sell it. So this is that weekly accumulation that we was inside from just the candle body. We've housed the rest of these bodies that we're still in. We're about to break that, but we do need a candle body through it. This is also interesting too, just as a short-term draw, but I think I might already have it accounted for. I'm pretty sure, yeah, this gap. So this gap lines up right up with my target, right around here. Okay, so that's cool. Higher for now, buy side liquidity targets previous month's high. Looks doable. Super strong day. Large range day. This should explode. just in case though. You just never know. So you don't need these two. Hold on. Yeah, I don't need this part. Did the framework play out? Yeah, it's actually a pretty good delivery. We do learn about pattern narrative or ourselves. I really only need to look for two models. The New York Reversal Daily Profile and the New York Retracement Daily Profile. Yeah. From retracements to buy and breakers to support higher prices. If things are lining up for the buys, expansion, not yet. News can flip Monday. Okay. Yes. All right. That's that on that. Y'all have a good day. Peace.